There's been a ton of discussion about Greece and the Greek economy recently, and not so much on a lot of media outlets about China. But China is in the middle of a huge economic meltdown involving their stock market and a number of other factors. The stock market crash in China is now stretching into its third week, and share prices in Shanghai have lost a third of their value since the middle of June. I mean, this is a huge precipitous decline in their stock market. And some say that this crash could have some pretty significant implications for the world economy, even more significant than what we might be seeing as a result of the economic crisis in Greece. So first question is, why are stocks falling in China? One issue is that there's been a huge overvaluation of the Chinese stock market. I mean, everybody from college kids to cab drivers and grandmas. I mean, whoever is the stereotypical person who doesn't know that much about the stock market in sort of colloquial conversation, all making small fortunes in this frenzy of stir-frying stocks called Chaogu in China. The stock rally happened at a time when the broader Chinese economy was slowing down, which was puzzling some financial analysts as well. And it all now seems to be coming to a head, Lewis, where the Chinese stock market was detached from the actual reality of the Chinese economy. And now we're seeing, to call it a correction is an understatement. I mean, a third of the value in just over 2 weeks, 3 weeks, I guess.
The most amazing thing to me is not that this is happening, but it's that there is just so little coverage of it. I mean, you would think such a, something so important would be discussed. I guess Greece is kind of taking away from that.
It is. And so there's kind of two sides to the importance to those in the United States or in other parts of the world. On the one hand, we know that China is a big holder of American debt and that the Chinese economy is now very much entangled with the American economy. So that would be a reason to be paying a lot of attention to this. At the same time, China proactively restricts the amount of foreign ownership of their stocks, of their stock market and shares of their companies. So that has actually served to limit the exposure in other countries, including the US, to what's happening in China. And some economists are saying, we don't need to worry that much about this Chinese stock market crash. This was a necessary correction. It's a natural correction. But China is kind of panicking, and they're doing everything they can to stop the crash, which might not be that good in the long term. They've cut interest rates to record lows to try to get brokerages to commit to buying billions of dollars worth of stocks. The chief economist for Asia, excluding Japan, Dong Tao, at investment house Credit Suisse, says that Beijing fears that this stock decrease could undermine consumption, as people who are experiencing losses would be less likely to go to the mall and spend money, for example, which is very reasonable. So we will see what ultimately happens here. One other thing that I want to talk about with this Chinese crash that's very much related to the American mortgage crisis. Remember that period where property values in the United States were going up, up, up. So banks were willing to give mortgages in situations where they maybe otherwise wouldn't, where the economic situation of the borrower wasn't that good, or the property maybe wasn't really that great of a property, because they were thinking, listen, if we have to foreclose, we'll foreclose on a property that will be worth way more. Turns out that didn't happen. In China, much of the stock run-up has happened with borrowed money, kind of under the same idea, Lewis. Hey, the stock market is going up, up, up. We have to pay back the money that we're borrowing all of a sudden. We'll be able to sell just a piece of the growth that we've seen in these stocks, and it won't be a problem. Now that the stocks are crashing, remember, you've got borrowed money invested in those stocks.
It's incredible what can happen when everything is fueled by greed, isn't it?
Yeah, truly is. So we will continue to see what happens in China. Big news, probably bigger in many ways in terms of the international implications than what's going on in Greece.